Good afternoon, and thank you for joining us today. My name is David Talbot, and I'm Managing Director and Head of Research here at Red Cloud Securities. I'm delighted to host another Red Cloud webinar today, this time on uranium. And we are going to hear from GoviEx Uranium Management, Daniel Major. He's their CEO. Now, during today's webinar, he will provide an overview and outlook, and then we'll take some questions, and you can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this GoviEx webinar, forward-looking statements may be made. I would direct listener to its forward-looking statements outlined on page 2 of its corporate presentation, and that can be found on the company website, goviex.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered for a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on GoviEx Uranium. Now, before Daniel steps up, I would like to say a couple of words. First, a plug for our upcoming lithium-ion battery supply chain investment conference. It's in conjunction with Benchmark Mineral Intelligence World Tour. It's next Tuesday, April 26th, live and in person at the Omni King Edward Hotel in Toronto. We'll have presentations from industry info providers, including Benchmark and Romotion, and we'll have 14 companies focused mostly on lithium, nickel, and cobalt speaking, and you can register for that at redcloudfs.com. Now, on to uranium. There is ongoing news from Ukraine and the fear of the Russian uranium and enrichment disruptions, and these continue to add upwards pressure on the uranium price. Well, the price started at $40 a pound at the beginning of the year. It surpassed $63 a pound recently. It's currently sitting at $62.50, and these are the highest prices we've seen since March of 2011. Now, this is largely due to a lot of buying from Sprott Physical Uranium Trust, but also the war in Ukraine, which could lead to the U.S. losing access to about 40% of its uranium supply. We do see the stocks performing relatively well on rising prices, and because the UK recently has decided to triple its nuclear capacity by 2050. Now, we're not talking about a very big program as it is, but certainly that news is good for positive investor sentiment in the space. Bottom line, we still like the fundamentals for driving uranium prices higher. With disinvestment in the uranium sector, there has been a lack of exploration and discoveries, and new mines will be needed in the coming years to replace mine closures, let alone to support the continued growth in uranium demand. So perhaps current prices over $60 a pound will help. And with that, I now turn it over to Daniel to update the audience on GoviEx Uranium and how they're going to help fill that demand. Daniel.
Thank you, David, and much appreciate the intro there. And I'll touch a bit more on the uranium market as we go through this presentation. But just for those that don't know us, and just for those that do, just a reminder, there are cautionary statements, as David said. You can read those at your pleasure, as long as you've got good eyes like me. So we are an African-focused uranium development company. That is our key target, is to become a producer. We are focused at the moment on the two main projects, the Madaouela project in Niger that's fully mine permitted, and the Mutanga project that's also mine permitted. We've been targeting the Madaouela project to complete a feasibility study on that, simplifying design, focusing on debt financing for it, to be able to complete that in the next couple of months. We've brought our team together to focus on getting our contracts and our financing sorted out on that, and we're working towards that, and that will really come off the back of the FS. We've got a very large mineral resource already, but we've got a lot of exploration upside on all of our properties. And then we've got the third project in our quiver, which is the Falea project in Mali, much more an exploration pay. It has got a uranium resource, a sizable one, but at the moment we're trying to better understand the drivers of that geology and what is also bringing in the other elements that are in it. So we are Africa, as I said. We looked at other jurisdictions over time. have decided that Africa is a place we're comfortable with. I started my mining career in Namibia, what was then Southwest Africa, back in the 80s. And Africa has been comfortable in supplying uranium since the early 70s, particularly out of Niger. And now Niger and Namibia are the fourth and fifth largest producers globally. We're in Zambia as well, another mining jurisdiction. And even Mali, which until recently really has just started to get into the mining industry, but is now the fourth largest gold producer in Africa. Just something on the market. And I agree with a lot of what David was saying, but I think the key factors here is actually the fundamentals are still very much in play on our industry. And in fact, they're getting stronger as we go. The WNA came out a couple of years ago with their revised growth, looking at 2.6 per annum. They always do a high and a low base. The high base requires political movement. And I think the one thing we've seen, firstly, coming from escalation in energy prices about a year ago, you then saw COP come through. Now you've seen the actions of what's happening as a result of the Ukraine and Russian sanctions. And this is underpinning the overall basket of energy prices. And nuclear is part of that energy basket. But energy security has become key. So a lot of countries have shifted their positions on nuclear, very much pushing to adding it or expanding it. You've seen a lot more noise out there on the small modular reactors as well, as governments are supporting those in a greater level of strength. Hydrogen, again, another area which nuclear is looking to be very much part of, is becoming very much part of that play. We're supporting programs in places like Germany, the US, France, all looking at hydrogen, and in the latter two, very much looking at hydrogen from nuclear as a big program here in the UK with EDF on that one as well. So demand looking stronger as we go on. And it's the supply side really that is causing the problem for the industry. Not only are we continuing to see a supply deficit in general, we were looking at the market being fed from the secondary. Now, Sprott had been taking some of that secondary already away from the market by buying up those inventories. You were seeing inventory drawdown. But the other area that you historically seen material come from for the secondary market was the underfeeding coming out of Russia, Russian government and underfeed sales. Now, those have stopped as a result of the sanctions. What you are seeing is a lot more of the utilities are being forced to pull down on their inventories. They're now starting to worry much more about diversity of supply, particularly North American utilities, the US guys, and some of the European ones have now banned completely any purchasing of Russian material. This causes a problem. People like Urenco are now having to figure out where they're going to get enriched product to supply under their contracts. That causes them a problem because they've now got to get UF6. The UF6 market is in deficit as well and will remain so until Convidine gets up and going in a year from now. So you're getting a big tightness across the whole of the uranium sector. And you've even had the problems as well by the sanctions and even things like an insurance and in shipping sanctions coming out of Russia, which means Kazakhstan only has a route out via China to get its shipments out. Now, it sells about 40% of its material to China, so that helps. But a lot of the shipping companies that we talk to are fixated on trying to find ways of getting that material out into the Western market where it needs to be delivered. And of course, people were not comfortable after the riots in Kazakhstan earlier in the year, particularly when the Russian government was called in with their military to provide some support to put those riots down. So that influence areas come through. What we are seeing is the major factor is the diversification. A lot of the big utilities are looking forward. They want to know where new supply is coming from. We saw this really trending last year. A lot of the RFPs coming out were to the developers trying to figure out who's who in the zoo. I think the key factor out there at the moment as well is that term contracts just under the $50 mark, with spot being well above. You are starting to see contracts moving in that direction. I think we'll certainly see under some of the contracts that have gone through discussion, there's a lot more people offering metal up towards the 55 number than we saw in the past. So expect it to break up as we go forward. So the fundamentals looking really good for uranium. And where does that put us? We're about getting into development. We've been working long and hard to get Madaouela to where it is. We timed our development pace so that we felt that we would be ready on a feasibility study when the market was ready. We got lucky in some aspects. The market definitely is ready for supply, and certainly that diversification of supply. So trying to get that one into production by 2025. Then Mutanga will follow it on. It's also permitted. And then Falea, we'll see where that strategy plays out after its exploration. So Madaouela, in the middle of Niger, in the middle of the Sahara Desert, it is right next to the towns of Arlit and Akokan, which are the towns that were built by Irano back in the past to feed the supply of people into the Cominac and Somaïr mines. Cominac has subsequently closed, but Somaïr is still operating. It's probably got about another 5 to 10 years left in it, and then it will close. But it's actually slowing down at the rate of production. It's down about 25-30% on where it was at its peak. But what it means for us is good infrastructure. There's roads, there's power, and more importantly, there's people who are trained, and there's really good water. We're in the middle of the Sahara Desert. Things like solar power are definitely an option for us to look at as part of our feasibility study. We are updating from that. Our PFS was done in February of last year, so very up to date with no major changes. It was very much a debt-focused PFS for us. We want to understand how the debt market would look at it, what risks we needed to remove from the project, how to structure it so that the debt lenders would look at this and say, yep, we can cover that from a deal point of view. We're looking about a 50% debt to equity at the moment at about a $50 to $55 price. It is low operating cost. We are working strongly at getting our capital costs down, again, further simplifying it. So everything's on track for the end of this quarter to complete that FS at the moment. We have the government. They have a 10% free carry and a 10% non-free carry. We have the other 80%. So having the government as a backer in here is very important. So they're looking for growth. They're looking for new jobs, etc. So some positives on all of that. We got Mutanga. I don't think Mutanga really gets enough credit for what it is. It's a very strong little project. Like Madaouela, Madaouela's 20 years of mine life. Mutanga's running at approximately 11 years. It's got a lot of infill. Those colored deposit areas you can see there between them have never been drilled. But the key for this one really is it's shallow. It's low strip ratio, but more importantly, very low acid consuming. So 11-year mine life, slightly higher on the operating cost, but very low capital cost. We own 100% of this one. Target here this year is to really put our drill rigs in, complete the infill drilling on the main deposit at Dibwe East, complete the metallurgical confirmation test work we need to do, and then on the back of that, just test for water. Target here is really by 2024, get its feasibility study finished, so that it can come in right behind Madaouela from a construction perspective. And then lastly, Falea. This is a uranium project to start with. There's a flat-lying uranium deposit under the number 1 circle there, about 30 million pounds of uranium, but it's got copper and silver in it. But it also happens to be on 2 big gold trends in Mali as well. What we find interesting is that when we've done the IP work and the geophysics, we have a really big target that sits underneath the flat-lying uranium deposit right up against the main road fault. We went back and looked at holes that were sitting there that the predecessors had drilled, but not assayed below the uranium. We're finding gold in them. We found copper in them. So we're now currently drilling under that, waiting for those results to come back. Unfortunately, most of those have to go through Burkina Faso all the way down to South Africa for assay. So it'll take a little while to get those assay results back. But, you know, what we're seeing on the core is what we've showing on these kind of things. A lot of faulting, a lot of sulfides, a lot of quartz. But, you know, never know what the results are until they come through. Very much a board that's got the experience. A lot of us have been in Africa for a long time as well. We really structured our board for development. People like Dave Cates as well with his uranium experience, Benoit LaSalle and Salma with their West Africa experience, Chris Wallace with his debt experience as well. We are well funded at the moment. We obviously are accelerating our burn rate as we go forward. So, at some point we are going to have to look at our cash requirements. We do have a debt with the Nigerian government. We actually have raised quite a lot of money since the beginning of this year under warrants as well. But we are negotiating our debt position there on a deferment. When we get something, we'll advise, but it's part of ongoing negotiations. And then lastly, really from a value perspective, GoviEx continues to trade at a big discount. But there's two real factors here. One, the real way to make money in this industry is on the curve, which is you either make money as a pure explorer of finding something for new, or you make it going from being a developer to being a producer. Those are the two big areas where investors make a lot of money. And we're in that stage at the moment of going forward to become a producer, not on one mine, but on two mines. And remember, a lot of our peers only have one project. We have multiple projects. And the other area is takeout. That's not our target. Our target is to build. But if somebody were to offer us more money than we could refuse, then we would obviously consider it. And in the last cycle, most of those takeouts were in Africa. So really, just to summarize, very strong views on the market. We're seeing some consolidation around the $63, $64 number. Expect the uranium price to continue up. It is very tight. It is becoming tougher. And I'm at the WNFC next week, and I've got a lot of meetings with utilities as a result of them trying to understand where future supply comes from. Large mineral resource, a lot of exploration upside, 2 permitted projects. First one, as I said, FSL. We've got Endeavour Financial already working on our debt structuring. We brought in Chris Lewis last year for our offtake negotiations. We have been filing for RFP, so we're on the list for the majority of the utilities that are out there. So in a really good position on all of that. So thank you for listening. And David, back to yourself.
Great. Thank you very much, Daniel. Very informative presentation and concise and quick as always. So now we'll start with the Q&A portion of the webinar. A reminder to everyone on the line, you can type your questions into the chat box at any time, and we will get to as many as we can. So already have a few questions here. Daniel, you started off saying you're comfortable in Africa, and there are some large assets out there. But I wouldn't say that many of the jurisdictions are saturated, maybe with the exception of Namibia. But do you see any opportunity for GoviEx for further exploration or project acquisition opportunities there?
Yeah, always. I mean, we started consolidating back in 2016 when we picked up the Mutanga and the Falea projects. I think we're always interested to see what is out there. I think Africa is a great opportunity for consolidation. I think you're already starting to see the US guys consolidate. I think you'll see something similar go on in Canada, but I think Africa offers a lot more. There are some very large uranium belts, whether it's up in Niger, the Timosoy, which goes all the way through to Mauritania. You've got the Karoo Rift that goes all the way from Mali, all the way through southern South Africa. And then you've got the Namibian projects as well. So Africa's got a lot more opportunities to go forward. Exploration is key, but obviously at the moment, our capital commitments are towards development. Once that's up and going, we can clearly then refocus. We've got brownfields exploration around our existing projects, but certainly, if the right opportunity comes around, GoviEx will definitely look at it.
Okay, great. I have a supply question here since you're on top of this topic. What would be a realistic way forward for the supply of enriched uranium by Russia? And how would others such as Kazakhstan and its JVs with Cameco, Areva be able to supply uranium in that situation? I'm assuming if there is or is not a disruption.
Yeah, I mean, there's a couple of aspects here. So question we ask ourselves a lot about, how does the world deal without enriched uranium coming out of Russia? And particularly 20% of it currently goes into the US. I think, one thing I think there's always leakage in a business. I think uranium is a little tougher than most to get leakage, given it is so constrained in the way it's doing. What you are looking at, and you'll see a lot of people talking about it as well, overfeeding is definitely one of the ways that's starting to look at it. It's an aspect which is slightly opposite that hurt us in the past, which was underfeeding. We're now seeing overfeeding becoming one of the factors where the enrichers can actually push more uranium through the enrichment process than they would before to try and get more EUP out by getting a higher tails. The problem with that problem is you then need more UF6 to feed the beast. But as I said, there's a bit of a problem at the other end that UF6 is in short supply as well. So you're going to have to see that. Now, that will partly get resolved when ConverDyn comes back online and will help push that through. But, this is the dynamic problem, and I was talking to one of the enrichers who basically said, I have a tsunami of supply problems at the moment to deal with here, is that, having Russia out of that whole end, somebody's going to have to pick it up. And I think you will see people like Urenco, et cetera, trying to find ways of bringing new capacity on stream. They've not needed to do in the past because of Russia's position, but they've got to take a political view on where that stands going forward. And we already know the UF6 coming, and then you need the uranium supply behind it.
Right. Do you have an opinion on why the market doesn't seem to be picking up on this potential black swan event for the sector?
Let's split that slightly. I mean, there's the spot market, which is kind of like the now, and then there's the supply side, the real supplies, demand side, which is the utilities themselves. I think the utilities are very much knowing this is a problem. I mean, you look at Vattenfall, for example, who came out and said, we are not buying from Russia anymore. They've turned right round to Urenco and said, we want supply from you. Well, Urenco's problem is, as I said now, is like, well, hell, do we get that from? You are going to see a lot more pressure onto that term contract market. Trust me, it's coming. This industry does not move in any hurry. You've got the UNFC next week. There are a lot of utilities turning up to that one as well from all over. There's going to be a lot of the discussion has been about where does material come from. And you're starting to see the bigger utilities very much saying we need to increase our support for restart or new projects coming out. So they're trying to balance their risk with the existing suppliers. But at the same time, they know they've got to put more risk on the table to support new supply coming on stream.
Mm-hmm. And I guess to that end, you have hired a uranium marketing expert yourself. Are you actively seeking long-term contracts at these sub $50 a pound term prices, or do you need something higher?
No. Look, at the moment, without an FS, we're having to kind of hedge our bets. So we wouldn't want to underbid ourselves, and we're quite happy to bid it in a higher price. And as I said, the last big tender that went through, most of the people are in the 50 to 55. The people who won that one, and public knowledge, which is the Duke one, were the Paladin guys. They were desperate. Got a 5% position. Their position was under 50. So that was public knowledge anyway. You can see that from the contracts that were out there. Some people have got tender bids going in at 70 to 75. So there's quite a big range out there. We are positioning ourselves. We're bidding. We're learning a lot as well about what utilities are expecting, not just price-wise, but structure. What do they want to see from the type of deal structure that you're offering? So, we're revising that as we're getting the feedback from the utilities. So it's all part of the, getting to know each other. So when we've got the FS, we can go back and negotiate off the table. We don't need to be doing it through the RFP. We'll do it off market.
Right. Okay. You have projects in Zambia, Mali, Niger. Can you perhaps discuss a little bit of the political risk issues that investors should be aware of right now? I think Niger is certainly key to your company, but I think Mali is also topical.
Yeah, I think the biggest geopolitical thing that gives me grief at the moment probably is the US and Europe, to be honest. Simply because there are so many constraints on what you can do financially, etc. So that's one issue. Yeah, look, Niger, no. Niger is very much got the support of the US. If you look at the US position on Africa. Senegal and Niger are right on the top of the list of support. Those are areas, because you're seeing places like Mali, Cameroon having a lot more Russian influence going into those areas. So Niger, I feel very comfortable with. Mali obviously has been hitting the headlines. There are concerns there, but that's our exploration play. It really, we've got years of work there before I'm going to worry about that. Zambia, we've had a new president come in just over a year ago. Very pro-business, changed a lot of things on the mining code, the mining taxes that are a lot more positive. You're seeing a lot of the copper companies who previously were just sitting on their hands or trying to figure out how not to do anything are suddenly announcing expansions, putting real money in, a lot of new developments going on into Zambia. So, where it really counts from a materiality point of view, Niger, Zambia, very comfy on those two. Mali, obviously some concerns, but as I say, it's an exploration play.
Okay, let's talk about a couple of different projects here. Let's might as well start off with Madaouela. So, what differences do you expect in the DFS versus the PFS, which recently, I guess, previously lowered OPEX?
Until I actually know the answer, it's a little difficult to answer the question. I mean, one point I would say is that the PFS was very much about standardizing everything that we were doing. We had some technological risk that we'd built into the previous PFS where we thought new technologies would come through. They didn't. We took them out, slowed the project down to make sure that the open pit covered the full debt tenure. So when we went to finance it, the lenders will not have to worry about the underground mine at all, which makes it just so much easier to get it done. What we have done very much in the FS is to kind of say, all right, that's the standard that we've now set. Where can we get further trade-offs? So we've looked at comminution and said, comminution, the grinding part of it and the crushing, right? What can we change there? How can we change our comminution circuit to reduce our power demand? How can we reduce our cost in that area? We've looked at, aspects of ion exchange and said, can we trade off different types of ion exchange? So we've used it more about, we've standardized design. What can we do to make it better? Power as well. We have the power grid. But, we're in the middle of the Sahara Desert. Let's look at renewables as well. They are cheaper. It'll help our ESG footprint as well if we don't keep taking from a coal-fired power station. And that helps bring our power costs down by doing that. So there's many of these aspects, and I'm sure I'm going to get an inflation question at some point here as well. So, but that's part of what you try and do as an engineer is, look, inflation's always around. Sometimes it's high, sometimes it's low. You got to look through the inflation as well. A lot of the inflation that's out there is COVID-driven or Russia-driven. Those factors are not going to be around forever. You're seeing China starting to open up already. Once that shipping issue gets sorted, that's it. So part of this is a look through, but a lot of this is about engineering out inflation. What can we do to make our project better than any inflation that was out there? Can we get stripping ratios down, for example, a lot? So we've been re-looking at the mine design to try and drop costs on that. So, I can't tell you what the answer looks like because I don't know myself, but I can tell you what we've been trying to do to try and offset factors before we get to the final position.
Right. Well, you just touched on my next three questions. So since we're here, why don't we talk about inflation first? Do you see, obviously with inflation picking up, do you see a benefit of ordering equipment needed for Madaouela sooner rather than later?
No, not really. Simply because, look, inflation is there. I mean, the one counter of being in inflationary markets is commodity prices usually go up as well. So they tend to be cyclical with each other ultimately. No, because at the end of the day, well, one, I need to finance it, so I need to wait till I've got all the cash to be able to pay for these things. That's the one thing. But I think what is clear from a lot of the conversations is, whether you're looking at oil or these other things, there is leakage. I mean, you look at gas supply into Europe already, you get a problem, a constraint, you got a sanction out of some countries. What happens? You just buy the gas from the US instead. So that gas will now go out to China. There will be an offset to somewhere else. And gradually on a lot of these things, we're going to see a rebalancing on those costs as they work through. As I say, even on shipping, you've already started to see the only area really left with big shipping problems is China. It was like 470 boats currently stuck outside of Chinese ports. But China is now really trying to work on getting its COVID restrictions out of the way. And when you do see that shipping issue will get sorted out. Shipping rates will drop quite sharply, and that has the other impact of bringing down that inflationary factor. So, very much we're looking to where we're going to. I'm not looking at just where we are today, because today is not going to be the long term.
Right. Okay. You mentioned money. How confident are you that GoviEx will manage to secure funding for development? What's CapEx? How much do you need? And you did mention debt earlier. So how much debt do you think you can support with this project?
Yeah, well, if you looked at the PFS, it was like $350 million. Now, obviously, I'm hoping to get that number down if I can. We'll wait and see where I get to. But, we did that very much, as I said, to understand what the debt position was. That showed that we could do about 50% of that as debt. The rest will have to come from equity. But the point we look for the equity, it's because we've already got under our belt the offtake contracts and the debt side. And at that point, we'll come out to the equity market. The CPs for both the offtake and for the debt will be the equity. And at that point, we will raise the equity. So, I'm a lot more confident about raising the funds now than I was probably 18 months ago when the uranium price was down at 30. Now we're up at the $50 long term, just under. I do think it would go up. I've been taught, we've spoken to people who are already intimating they will pay $60 for long term contracts. So, if that is doable and we can get those kind of prices, then very much we're in a position to secure that debt and that equity and those contracts. So where I'm standing today, I'm as confident as I can be, but at the end of the day, we've got to go through the process.
Right. Are there any risks you still need to address here? Perhaps touching on concession renewals, other deadlines, maybe uranium prices or anything else that could impact startup?
Look, from a mining point of view, permit point of view, no, our concessions are in good standing. We have a really good relationship with the government. I mean, you got to remember, uranium produces about 10% of the annual budget for Niger. I mean, it really needs that. There's a geopolitics within Niger as well. There is very little employment up in the north. They need these two projects, anything that gets going up in that part of the world to offset what Orano used to produce in the past. Uranium price, look, from a risk reward point of view, I would definitely put my money on the up rather than the down. I don't see much of a down risk. I mean, look, we all got very nervous when the Russians started shooting missiles at Chernobyl and etc. in Ukraine. But, do I see the down risk, a black swan? Not really. It's going to have to be something shocking that comes out of nowhere. Given the supply fundamentals that we're at the moment, particularly exacerbated by the Russian supply issues. And even if they were there, we were going to get there at the same time. This has just accelerated the process. And I say, utilities are worried. They don't have a lot. And at the moment, they don't need to rush. They can still take down inventory. But the longer they keep taking down inventory, the more urgent it's going to be for them to fill up the other side.
Right. Okay. Talking about the moly price, what do you plan to use in your feasibility study, and how could fluctuating moly prices impact the future of Madaouela?
Moly was 10% in our PFS at $11. The moly price is around that number at the moment. So until we kind of figure out what our final moly position is, it doesn't make a big difference. We also look at the options of re-engineering with and without moly, depending on how the moly flows through. So, I have to try and work it both ways. At the end of the day, we're a uranium mine. Moly is just a byproduct.
Yeah. Okay. Do you see any need to return to exploration for the project, increase resources, extend life of mine?
No, not at all. I mean, look, we've got 138 million pounds there. Do I believe there's another Miriam out there at the open pit? Yes, I think there is, just south of us. To go down and explore now, you would be talking a few years of drilling. So there's no real reason. We just got to get Miriam up, running, funded, and going. Then we can go back to exploration on a brownfields basis. And if I can find that open pit during the development stage, then we defer the underground development and we just stay in the open pits.
Okay. Now, before we leave Niger and head to Mali, any final thoughts on GoviEx merging with Global Atomic? Making a larger Niger focused development company.
A question I get very often. Look, at the end of the day, on the right terms, yeah, it would make sense. I think you've got to also consider, though, if you're a GoviEx shareholder or a Global Atomic shareholder, both companies need capital at the moment. And therefore, you would be putting two companies together who are trying to build mines at exactly the same time. How would that work? And then the geopolitics of that in Niger, because that would be their bigger question, which is, okay, we don't mind you guys merging, but okay, can you guarantee you're going to build both mines for us? Because at the moment you're individually trying to do the same thing. So would it make sense? Absolutely. From a scale point of view, does it make complete corporate sense? That's a different question. Timing is everything, and also it would put a lot more of our back to your geopolitics. A lot more of our materiality would be back into Niger. Would be very Nigerian focused.
Right. Okay. Let's head north a little bit here. Some questions about Falea drilling. You're targeting other minerals such as gold and copper as well as uranium. How much are you drilling? How deep are you drilling? When do you expect results?
Yeah, well, we announced a 6,000-meter drilling program, 10 holes, one or the other, whichever way it turns out. I think we're 4 or 5 holes in at the moment. It's really trying to, underneath Falea, I mean, Falea's got copper and silver in it already, and literally the holes underneath it had gold. It's structurally driven. There's a lot of sulfides in there as well. The question for us is, do we keep trying to just explore for flat-lying uranium, or do we go after this big bulbous target that's sitting underneath, which could be something completely different and bigger? It may have uranium in as well. And so that's really why we had to go and look at it to say, look, if we're going to carry on exploring it for Falea, what are we spending our capital on going forward? And don't bother drilling for the flat-lying thin thing if there's a big fat thing instead. That's a lot easier. You get more tons for every meter you're drilling. So this is what this exploration is really about, to try and figure out. And then the other question is, okay, let's say we find something other than uranium. Then, Falea probably doesn't belong inside of GoviEx. It should be spun out into its own vehicle and becomes its own strategy. And we focus on the 2 uranium projects in GoviEx, and Falea goes somewhere else, either as GoviEx spinning it out or someone acquiring it.
Okay, you answered my next question there. So I guess maybe just to finalize here, when do you expect results?
Yeah, as I say, it takes a bit of time to get these things out. We are probably, with the copper grades, which we would like to do, we're probably at least another month away before even the first hole returns results. So they've got to go all the way down to South Africa.
Okay.
And there, the pleasure of COVID is still impacting people in laboratories, unfortunately.
Yeah, for sure. Okay. I guess last question here. We'll spend it on Mutanga. You mentioned that this project, at least in our past conversations, this project's about 2 years behind Madaouela.
Yeah.
Do you wish to complete additional exploration here, or is it all about development and moving that one forward at this point?
Again, it is very much about getting what you know across the board. You got to remember, these are mining permits that we have, and so under a mining permit, there is no requirements to explore. There's no commitments, so you don't need to that. So focus on what you've got. Adding additional pounds doesn't really help. If I leave Dibwe East to sit, which is the main deposit, it's about 45% of our total resource, and it's all inferred. So there's no logical reason to leave the inferred resource as an inferred resource, because you can't put it into an FS. So, yeah, I mean, what we will do as the drilling this year is just extend laterally on Dibwe East to try and get a better understanding if we've got an extension on it, and see where that goes. But with Dibwe East in it anyway, it's an 11-year mine life. And as you know, David, from a net present value point of view, if I add 12, 13, 14 years, it doesn't make a lot of difference from an MPV point of view. The only benefit we would really have from an exploration point of view is if we had a very strong conviction that there was a completely different deposit sitting out there, extremely high grade. Otherwise, if the grades are going to be generally the same, which most of our deposits there are, then we'll stick with mine development. The real returns on that project are getting it into production.
Okay. And when might you update your PEA? And do you have any PFS planned?
We won't update the PEA. We will just go straight into the FS on this one. I mean, the nice thing about this one, and it sounds weird to go from PEA to an FS, but Africa Energy and Denison, who owned the projects before us and had both gone to PFS already. So all the metallurgical work in the past has already gone to an FS level. So what we're effectively doing is just confirmatory test work ourselves, just to make sure that, you know, we can trust the data that was provided from the past, which is why we're comfortable stepping out of going from PEA and can cut straight to FS. And again, it's a really simple project. I mean, it's just an open pit heap leaching operation. And we designed it with a centralized processing unit and then satellite. So think it UEC, but just upside down. You know, they have a hub and spoke. We'll have a hub and spoke. It's also just be above the ground, not under it. Right.
Perfect. Okay, well, why don't we wrap it up there, Daniel? Daniel from GoviEx Exploration, thank you very much for being with us today. Thank you, everybody, for tuning in. Red Cloud Securities will be back next Wednesday afternoon when I sit down with Labrador Uranium. That's April 27th at 2 p.m. Eastern. And a reminder of our Benchmark World Tour Battery Metal Conference on Tuesday, April 26th. And you can sign up at redcloudfs.com. So thank you, everyone. Have a great day.